And good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the Dow Jones Industrial Average, being recorded on Saturday, November the 15th at 1:15 p.m. Pacific Standard Time. I'm actually going to start in reverse uh, with the cash market, and I'm on the hourly chart. And yes, you're going to see something that I'm adding right there. And this is, in my opinion, the first of our markets that I think has reached, there's a good possibility it has now reached its top level for all the way up to cycle wave 3. So let's kind of go over this, and I'm going to work my way backwards, because if I started on the largest chart, you can't see any of this. So again, here we are. There's the minute wave 4. So this is what we've been working in, a minute fifth wave higher. And I had marked it where the minuet fourth wave had completed, still within this diagonal triangle, moving up, which means everything is in threes, including this fifth wave. And so at best I can say I have A, B, and a C up. And then this very large decline, which really came back probably 75%, 76% of that rally phase. I'm thinking, oh, that's kind of deep. Could be a wave 2. It definitely could be. This could be 1 of 5, 2 of 5. But the size of everything internally, it would make this fifth wave gigantic in respect to the balance of the pattern with wave 3. Even though it could be A, this could be B, and then we'd be looking for C wave. So maybe not quite as high, but still, I think it would look pretty big. And if that were the case, let me go back over to here, and let me see, I got those, put those back on. And where are they? Well, actually, let me put the other one back on, because oh, okay, I took it off. Let's put 0.764 and then the 1.61, I think might be a little bit overkill. And so the other two have been totally met. So this one, that's why I took that one off. And we got the 764, which is just above where the market is. And then we have the 100% up here. So if indeed it's wave A of 5, let me just quickly put this together. And this is the B, which kind of almost looks impulsive rather than an ABC. Then you can see that 100% is 48,802, where the C wave up 1.6 is 50,000. So while I'm leaving open the potential that the market that could be A, this could be B, and we're going to come soaring back up again. But here's the difference between the Dow and the S&P and the NASDAQ. The Dow is price weighted. So what we saw on these sell-offs, we saw some of the larger, particularly was Goldman Sachs right there, was down 15 on Friday, and I think more on Thursday as well. So, and that's creating the largest rift within the Dow. And then again, we can go over the other 30 stocks or 29 stocks and see which are moving against and which are moving with. And so it's price weighted. So again, being that I'm looking at Goldman Sachs, higher price, but also, the price that went down, and now put that into the average. What's the percentage that the Dow then goes down? So with that in mind, it appears to me, and let me just one last thing I could put up to here. And let's just go over and look at it on a line chart. And the line chart, it does look like it's working its way into 5 down, which is going to give more credence to that being the completion point. Unless we don't come down and break that level, that we just stop here and we rally up from here, then of course it could be A, B, and we're going to come back up in a C, but there are your markers. These in between, no. Maybe that, 764, 768, 786, but I think everything in between, no. So we have that 0.764 here, and that's 100% is right above it. So I think I would take this off and If it is A, B, then pretty much that's going to cap it, I think. Or if it breaks and spills above it, then between 49,715 to 50,000 would be the next marker up. But right now, this could be counted as complete. It could be A, B, and then you got that C wave up, and then it's done. So let me take it back out of that line, put it back on the bar. And just again, this drop, I don't have anything. I mean, yep, it could be A, B, C, A, B, small, and then a C. And this is starting, it's getting its way back up. Leave that open. Otherwise, we're that close. Let me put it that way. We're that close. If it's not done, I think we're that close. And again, due to the difference in how these indexes are calculated, price versus capitalized. So cap weighted, that's the S&P and the NASDAQ. So what's the value of the whole company versus just the price? All right. So keeping that in mind, what would that then suggest if we're going to go backwards? We're just going to take this up to the daily. We're going to start dropping. Here's our first area of support, and that's the minor 4. So actually first would be, we have this fourth, which is 46,495. Let's see. Now, to tell you, look what we got. We got the 50 right above it at 596. So I think if this comes down and it breaks that, it's going to slice through that low. Brings us down to this low. These are just support levels, not where I would expect something this big finishing to find anything but take a breath. Take a breath in the market, re-examine, go to the next level. So it's just going to produce a lot of trading back and forth. So again, that would be the first layer. There's the second, and that low is 45,470. Then we're just, I think when we come down there, that's minute. We have to go down to minor. So something severe could be happening in here, right, to the market. Like if we break below that level, 45,470, you're looking for to pick up some speed. So this would be, again, cycle wave 4 is going to consist of 3 waves of primary degree labeled ABC. Within primary wave A, we should have either 3 waves of intermediate degree or 5 waves of intermediate degree to form primary wave A. So this would be the first one down. Is this going to be intermediate wave 5? No, because I'm looking for further down. I got the next box mark. So this might be intermediate wave A or intermediate wave 1. So we got a ways to go. So, but I'm following how I'm doing that. And then we can do our fibs as well. And you'll see how they start to line up. So you can come down and just work it to these levels. And that's where I'm looking for the mark to come down. But right now, initially, I'm looking for the market to give me 5 waves down on the hourly chart. Off of that high, I want to see 5 waves down. And then I can mark it whatever degree, and then I want 3 up, and then I want another 5 down, and I want 3 up, and I want another 5 down. So on the hourly, yeah, the first 5 is going to give us some indications, but then what comes after, so looking up then to the daily to get the completion. 5 waves down in the daily, like you're going to bring us down to that daily 200 at 44,690, right? So breaking that and starting to head down to the next levels, which would be there. But we also have, again, 4s. It's how I kind of mark them out. I start looking at where the previous lows were and where were they inside of which move. So that's a 4 inside of this 5th. That's buried. And then that 4 is within that same 5th. It's the one up, the minor. And so we got to, then it drops quickly, right? Because that's the 3, there's the 4. Where's it? The 2, and then down to the other 4. So again, that's how I'm going to mark it as it's moving down and be able to count it. So you're just looking for these pockets where the market could find support, pause, rest, give us the ability to fill in the count. Because you can see even on the hourly right now, it's pretty difficult. It's like, okay, 1, 2, 3. So it gapped lower, but that produce maybe wave 5 of this third wave. And this is 4. And then we come back down and we go down below there and go back maybe towards that level or this trend line. Well, actually that level, and stop. And then we have our first 5 down on the hourly. So now overall, yes, I'm looking for this thing to pick up speed, but the other markets aren't there yet. So again, I'm sorry, I keep bringing it back and forth. I have to leave in this potential that the market can start to go back up. And this is A, B, and then we still have that level up to that level that the market can be reached. All of this would just go with it, to be honest with you. This would be the one in motion. Everything above it is being completed because this degree completed, the minuet. If the minuet is continuing and minuet 5 is not done yet, then we're looking up here. All right, because this has to be 1 and that has to be 2. And then we have the 3 and a 4 and a 5. So that's both sides of this story. And now if I take it out again, like I just did, what are we finishing? Well, coming up, we're finishing that super cycle, not super cycle, cycle wave 3. So I'm going to bring it back out to here again. Cycle wave 3 started down here. And so where are we looking for cycle 4? Well, accordingly, Elliott left for us that a fourth wave of motion should find its terminus, its endpoint within the fourth wave of 1 lesser degree. So you can see as we start to get higher up in these degrees, like a cycle degree, we're looking back towards the primary fourth wave. Now, here's one other thing I want to talk about, because there are, and they're not necessarily my competitors, but other groups that do Elliott wave, publish Elliott wave, that are showing that this high up here, let me go back out to this high. Actually, it's this high. I wonder if they're flipping it out and over to this one. I don't know, because it was marked here. And this was marked as wave 1 down, and this was going to be wave 2. So they may change it, but here they were marking it, I believe, up to at least super cycle degree, if not grand super cycle degree. So we're going out back out to that maximum monthly, and it's, oh, come on. And it would be, I think it's super cycle. But if it's grand super cycle, then we have to work this to be cycle 1, cycle 2, cycle 3, cycle 4, cycle 5, super cycle wave 3, super cycle wave 4, super cycle wave 5, grand super cycle wave 3 sitting up here. I think that might be it. So, but it's the same drop, right? If it's a super cycle wave 3, where it's going to go back, it's going to go back to grand super cycle wave 3, then it's going to go back to the super cycle wave 4, and that's right here, same box. I just have it on a different degree, but it's the same box that gets called in for support. So yes, you want to call it a grand super cycle because it's going to clear it up, like, oh, why we could drop that many points? Fine. We're still going to drop that many points. So regardless of the cycle degree, for the near-term picture, even for the long-term picture, when we're done, we go back up. Even if it's all the way up to grand super cycle, this is only going to complete a grand super cycle wave 4, we still got a grand super cycle wave 5 going back up. So no matter what degree you want to call it, it's going to correct, and then it's going to go again all to new all-time highs. And while we're going through this correction, you're going to wonder, how is that ever going to happen? Just the same way that people start to think when this was sitting up here and you're starting to discuss, oh, well, this is really overbought, overextended, we're due for a larger correction. And everybody wants to go, how? That's not going to happen. We're not going to go from 48,000 back to, well, let's go back out and I'll show you. Now, back down to 6,500 or 6,700 or even 78. Whatever the number is. That's just not going to happen. Well, realistically, folks, it could happen, and all it's correcting is the last 16 years. That's a long time. So yes, it's a large correction. And yes, guess what? It probably should take 5 to 12 years to complete. So there's a lot of time involved as well. But yes, the market definitely can do that. And I would suspect that it is going to happen. Just like when we were sitting down here and the world was coming to an end, nobody thought that within 16 years, we'd be sitting up at 50,000. Not when we were printing 67, 6,800. You're like, no way, no way. Yeah, okay, we get a rally. Well, what were they saying at 28,000 when the pandemic came, right? What were we saying here when interest rates were so low, artificially held? Same deal. Market can't fall back. Market can't collapse. Market can't, it's not going to go up anymore. Same conversation. Better to just accept the math. We have the point today. Accept the math. That's how this is all put together anyway. That's how all these models are running on math. Different levels, different signification. So in other words, it's a volatility level, it's a gamma level, it's a delta level, whatever the situation is, it's a price level, it's a fib level. And how do I get to that next fib level? How do I go from 0.236 or 0.382 to 0.5 to 0.618? What is that calculation? It's called multiplication. Just like the sequence it is, you're adding one to the next. When you're doing it in sequence in terms of levels, it's multiplication. So again, it's all math. So by following the math and following the math of Elliott itself, then A, you're staying out of trouble in terms of what your count is. And B, you're going to come up with more secure levels, and you're not necessarily having to be searching for why is the market making this move. Let that up to the market. Let that up to whatever's going to happen. Just understand that your numbers, your math is telling you that we need to correct. We need for this because the market does it, folks. All you got to do is just follow the bouncing. You know what? And that's what just happens. It just bounces all over the place and does it in recognizable patterns. And that's what we're doing under Elliott. Okay, so backing back up there, I want to go back over to this chart. I think that this marking this complete as all the way up to that grand super cycle or super cycle, whatever it is that how they mark it, just mismarks what happened inside here. I declare this, I posted this as an ABC to complete that fourth wave. And if we just look, it's like 1, 2, 3, 4. And you can see 4 overlaps wave 1. And in pretty much anywhere you look at it, it overlaps wave 1. And that to me is a big like no. So putting it ABC, kept it as a 4, left open your door that you were going to go up and make an additional new high. So are they just going to shift all that over now? Maybe I don't know how they're going to explain it. Or are they going to put it as an irregular something? We'll see. But I'm marking it here with still the potential that we have one more leg up to do. And that would be, if we're still in this triangle, A, B, and a C. I'm a little doubtful, but I'm keeping the potential there until the market clarifies it for me by completing 5 down on the hourly and then again on the daily. Now you're into your long-term going down. All right, let's go over and take a look at the YM and then kind of wrap this up. Because again, the Dow is I didn't do that. Yeah, I did. There it is. I thought, oh, you didn't mark it. I did. And here you can kind of see a little bit better. And 1, 2, 3, 4, 5. So it didn't break here, but I got it down. So I'm going to go out to that daily now. And let's take a look. Look at that. So there's the minor 5. And we have 1, 2, 3, 4, and finally 5, leaving the door open that we might have one more, taking us up close to that 50,000 marker at 49,903. A little push up. What's $100 between friends? Excuse me. Could finish it. And then it's another ABC. As part of this, it isn't expanding, but we already did. Is it going to do it again? Maybe. Why? Well, you know what? We're in an end phase of a market at all-time highs. I believe it's doing an expanding triangle to finish it in that minute fifth wave position. If we have one more blow off top, because there's a sudden turn in Goldman Sachs and Salesforce and a couple of the big stocks in the Dow, Apple decided they're going to the moon. Well, stock's going to price weighted, right? Goldman Sachs could do it all by itself. If it decides it's going to go up to $1,000, who am I? I don't know. So again, keeping all that in mind, leaving that door open, that's why I'm looking at the daily. First of all, I want to see it come down and break the daily 50, and that's at 46,775. And put in 5, go up in 3, put in another 5, and come down here. All right, so I got support there. I'd like to see, yeah, okay, 2 things. I'd like it below here. I'd like it to form 5 waves, and then I want to see it break that minute 4, which is going to tell me this is done. If I'm breaking the low of minute wave 4, then whatever's coming down is not corrective. I mean, it could be, it obviously would be, but in terms of that, we're looking for a minute 5th wave. If whatever this is going to come down and break below the 4th wave, then the 5th wave is not in motion anymore. It's done. Okay, so, but that's confirmation then, isn't it? So that's why I'm looking for. I want complete confirmation to disqualify any additional rally and just point us lower. And normally what I start by doing is again, working the 4s, right? So we have that 4, and then that 4. Yeah, we have some in between, but this is where it's like, we're still dealing with that. There's our first one. Okay, we broke that. That's the second one. We broke that. This is done. We start to go. Because the major support then falls back down to the April 7th low. And that's kind of, I think, how algorithms are going to be programmed as well. They're programmed with these spots in mind. So there will be some support there at 43, 4,400, 43, 400. I will look for some. I don't think it's going to turn the market and force it higher to new highs or whatever. I don't think it completes this corrective phase that I'm looking for in any way, shape, or form. Maybe I should say it that way. It's going to find support, but it's not completing the move. That's going to find support. We may tag there. We may rally a little bit off of it and then come back again in the next leg down, the next larger leg down. So again, you can just walk it out that way. You can just walk it out and keep following it down and see the points at where it really starts to break. And then anticipate maybe something's going to happen somewhere to create it. So, very interesting. Very, very interesting. And if I just do it like this, I'm going to just put in straight fibs, minor 4 low to minor 5 high. I'm just seeing where's support going to come in on a fib level that's going to help me to realize this is all done, right? So most of the time, if we're going to have a pullback, if this is finishing 5 up, well, okay, we should pull back. Pullback would be 382 to 50%, maybe 618. If this is just seemingly only wave 1 of minor 5, would be a stretch, but only wave 1. Or maybe it's just finishing wave 3, minute 3 of minor 5. Again, I don't think so, but these are possibilities. So what happens then if we're there and we're looking for 4th wave? Well, 4th wave of 1 lesser degree. Okay, we're looking back. If the 3 goes up to there, I'm looking again for here down to here. But again, I'm not feeling that way, but we have to include all of the possibilities if you're trading. But I think we start to go through. So again, if it's done, you're going to see it come through that, break that, right? That was one level I wanted to see. That's a weekly. So the weekly 50, yep, and break that fib level, yep, now we're cooking. Now it should not be a problem to get down to there and do it in 5 waves. I'm going to continue to look for the development and the completion of 5 waves down on various degrees, starting again at the minuet. So minuet 1, 2, 3, 4, 5 to produce minute wave 1. And then minute 1, 2, 3, 4, 5 to produce minor wave 1, minor 1, 2, 3, 4, 5 to produce intermediate wave A, or intermediate wave 1. And we're just build it going in the opposite direction. All right. I don't really need to spend a whole lot of time, but please also understand that each, even though the other indexes are cap weighted and this is a price weighted, the options on it are the same in terms of they have gamma, they have theta, they have vega, they have delta, there are gamma levels, there are volatility triggers in the diamonds, in the YM, in the Dow Jones, the cash market. And there are different services that do provide that. And I think there you can also get the algorithms that will produce it for you. But they exist. And then all the underlying also have those same types of levels. And therefore, options are continued to trade heavily. Diamonds are not too bad. I know the YM and yeah. So the options are really DIA, which is the ETF. But within the 30 stocks included in the Dow, they all trade options. And those options, those companies, the Goldman Sachs, the Apple, and everything else, they have volatility triggers. They have call walls, put walls, hedge walls, everything, it's all sitting there. And as a result of how the options are trading and where things build up and where things get placed, short and long. Good to know how they are and where they are because they affect the market. I'm sure several were getting tackled right there when the Dow just dropped out of bed. And that would have been on Thursday. We just dropped. And this is Thursday. From the opening, we just went down. I believe it was Goldman, to be honest with you, but there were other things in there as well. And we dropped fast, and we dropped hard. And so that's, again, I'm looking for that as well. And, you know, part of it is, it's like you have to remember, it's like these are so overvalued. And now we're going into moments of uncertainty. I mean, if we're going to add that outside factor, it is something to consider as well, even though I'm going to be trading more mathematically. So I'm relying on that. But what the stimulus that could force this move, this reevaluation of where everything is and what could be coming to support it. So what we're doing at the same time is that I'm looking at it mathematically because that's the numbers. So you work the numbers and your position should be okay. Trade accordingly, and you should be able to manipulate and work it and trade it. So having said all of that, pay attention to gamma levels. I'd give them in for the S&P and for the NASDAQ, and then so for the Qs and for the spiders. So again, I just don't have the available data in the DIA. Right, I am going to end it there and say we're going to keep a very close tab. I'm believing that I'm calling the top in the Dow, leaving open the potential. I have to give it at least a 50 probability because a wave 2 can come all the way down to the start of wave 1. And if this is wave 5, or it can come all the way, hold on. Yeah. So actually we're looking as if this is a 5 waves down. And what did I say? Whether this could be, this is 5 and it's 1, 2, 3, 4, 5, 1, and then 2 and then a third, or we still have a little bit more to go. Or is that going to be enough? And it turns into, without the extra 5 to put it in down below, it's an ABC. And we have to put a wave 2 there, excuse me. That was the big, that this is 1 of 5, 2 of 5, or A of 5, B of 5, and we have a C wave up. That was the deal. My apologies. Again, senior moment, right? Too many counts in my head. But that was what I was talking about. All right, that's going to be it. Unfortunately, I don't do these on a daily basis. I may consider picking that up and doing that. But I have to kind of go over the things in as well. So, but the next update will be next week.